Welcome to CrushTheStreet.com's weekly market wrap-up. Let's get started in the equity sector, which has been feeling some heat in recent sessions due in part to provocations from North Korea. While such banter is nothing new from the isolated communist state, there are uncertainties regarding the new change in leadership and that perhaps this time there will be some bite to the bark. The Asian markets, with the exception of Japan, reacted bearishly to the heightened tensions, although much of the pessimism is centered on the upcoming US jobs report, where the general consensus is that the report will confirm suspicions of slowing growth. If so, we could see a parallel market correction negatively affect all international sectors simultaneously. Over the last 6 months, the market has been deflationary in the face of assertions suggesting otherwise. The Federal Reserve, while it technically has been printing billions upon billions of worthless fiat currency, has very creative ways of hiding the inflation into their balance sheet. If we take a look at an 8-month technical snapshot of gold, we clearly see evidence of this creativity at work. Is it manipulation? Absolutely, but it's sophisticated manipulation in that if you call it manipulation, you would immediately be labeled as an Alex Jones listening kook. Let's pull up some relative strength charts. Ever since gold's blow-off move in August of 2011, it has been underperforming the S&P 500 index. This weakness was especially evident over the last 5 months. During that time frame, the strength of gold relative to the S&P declined by over 21%. From the blow-off of 2011 to the bottom of 2012, gold's strength declined 33%, but this decline occurred over a 12-month period. Silver, as expected, also underperformed against the S&P, but with far greater volatility, giving up over 29% of strength relative to the index. Theoretically, both metals could still see further weakness, with silver likely to challenge the 26 even mark. However, a bottom could be forming in the markets. First, the RSI indicators measure extremely oversold. Given potential weakness in the labor and manufacturing sectors, a fear trade could give a significant lift to the bullion market. Second, not all precious metals underperformed the S&P during recent sessions. Platinum, for one, showed noticeable strength between August and February, with their current spat of underperformance appearing to bottom out. Palladium, however, has been trading in lockstep with the S&P. While it hasn't broken a record high, it still maintains an upward trajectory despite significant weakness in gold and silver. If we take the price action for the platinum group metals as leading indicators, it does suggest positive things for precious metal investors willing to spare a little patience within a down cycle. And that will do it for this edition. Thanks for watching, and we'll see you next week.
For more unconventional ideas, please visit CrushTheStreet.com.